You typed buying a home in Rancho Cucamonga into YouTube. That means you're either ready to buy or you've been close to ready for a while and something keeps stopping you. Rates, prices, timing, uncertainty. I'm going to clear all that up in the next few minutes because the market right now is not what you think it is. And if you're waiting for the perfect moment, you need to see what the data actually says before you wait yourself out of the best opportunity you're going to have in this market. Let's get into it. My name is John Abril. I'm a licensed real estate broker and a licensed mortgage broker right here in the Inland Empire, and fewer than 6% of California licensees can say that. I hold both licenses. I run my own brokerage, and that means that I'm not calling someone else on the phone to get you your numbers. I run the deal on both sides, the search and the loan, so nothing gets lost between the agent and the lender. Because in most deals, that's exactly where things fall apart. I've been in this market for over 25 years. I've watched the bond market longer than most agents have been licensed. I know Rancho Cucamonga, not just the zip code, but Alta Loma, Victoria Gardens, Day Creek, Etowanda, the neighborhoods, the schools, the HOAs, the nuances that never show up on Zillow. This video is going to give you the honest picture, the real numbers. No hype. Let me give you the real picture, not the headline, the actual numbers. According to Zillow, the average home value in Rancho Cucamonga right now is approximately $779,000, down about 1.1% over the past year. Meanwhile, Redfin's most recent closed sales data puts the median closer to about $785,000. And if you're on Zillow or Redfin right now browsing active listings, you're seeing asking prices closer to $828,000. Those three numbers look different, and here's why that matters to you. The $779,000 is what homes are worth. The $828,000 is what sellers are asking, and the $785,000 is what buyers are actually paying. The gap between asking and closing, that gap is your negotiating room. And as of right now, the gap is real. Homes in Rancho Cucamonga are selling at about 98% of the asking price. And on an $800,000 home, that's $16,000 off before you've said a word. This is not a 2021 market. You're not writing offers on $50,000 over asking with no contingencies. That era is over. Here's the stat I want you to write down. 58% of homes currently listed in Rancho Cucamonga have already had a price reduction. A year ago, that number was 46%. More than half the sellers in this market have already adjusted their price once. They're telling you something. They're ready to deal. Days on market, well, homes are sitting 36 to 63 days depending on the area and the condition. Anything over 45 days is a motivated seller. If you see a home and it's been on the market for 60 days, that's not a red flag. That's leverage. The city isn't one market, it's four. Alta Loma, north of the 210 freeway, up against the foothills. This is where you get the views, the bigger lots, the older homes with character. The schools here are among the best in San Bernardino County, but there is a trade-off, and most people don't find out about it until they're in escrow. Wildfire exposure. North of the 210 freeway, you are in the foothill zone. California's 2026 insurance regulations have made coverage here harder, more expensive to get in these areas. I've been seeing buyers get 2 weeks from closing. Great house, great deal. And then the insurance quote comes back and it breaks the payment. I'll talk more about that in the mistakes section. Just know, if you love Alta Loma, factor insurance in from day one. Day Creek and Etowanda, this is newer Rancho Cucamonga. Master planned, well-built, great schools. If you want a clean, modern home without the character of Alta Loma and without the insurance headache, this is your target zone. Price per square foot here runs in the low to mid 400s. Terra Vista. This is the first time buyer's sweet spot. Planned community, solid construction, homes ranging from roughly $450,000 to $650,000. If your budget tops out before $700,000, this is where I'd like you to search. Now, Victoria Gardens area, more lifestyle, driven to walkable shopping, dining. If the suburban-urban blend matters to you, well, this is it. Here's what I think gets missed. People look at interest rates and they say the market should be crashing right now. But Rancho Cucamonga doesn't crash the way people expect. And the reason is straightforward. Rancho Cucamonga is 37 miles from downtown Los Angeles. It has a Metrolink station. It has 165,000 residents, nearly 70,000 jobs, and some of the best public school ratings in the entire Inland Empire. The buyers who are landing here are coming from the West Side, the San Gabriel Valley, the South Bay. People who are done paying $3,500 a month to rent a one-bedroom in Koreatown and have realized that an $800,000 home in Rancho Cucamonga gets them 1,800 square feet, a yard, mountain views, and a school their kids can actually attend. That migration floor is why Rancho Cucamonga prices haven't collapsed. Demand doesn't disappear. It waits for the right opportunity. Let me make this concrete, because the Zillow number doesn't tell you what your bank account looks like. Take a $780,000 purchase price. 10% down, that's $78,000, leaves you with a $702,000 loan that is under the 2026 San Bernardino County conforming loan limit of $832,750, which means that you are in conventional loan territory, not jumbo. That matters. Jumbo has a different qualifying standard and usually a much higher interest rate. Using Freddie Mac's most recent weekly average of 6.53%, your principal and interest payment on $702,000 comes to approximately $4,470 per month. Add property taxes, San Bernardino County runs approximately 1.1% to 1.25% annually based on the purchase price. On a $780,000 home, that's roughly $700 to $800 per month. Add homeowners insurance. Now you're in the $5,400 to $5,800 range for a total monthly housing cost. Here's the rule of thumb that I use so that numbers feel real. Every $10,000 less on your loan saves you about $75 per month. So if you negotiate a $780,000 home down to $755,000, that's $25,000 off. That's nearly $190 per month back in your pocket every month for 30 years. Negotiation is not a nicety, it's math. Now, here's where most videos stop because most agents can't go here. I can because I hold a mortgage broker's license in addition to my real estate license. Fewer than 6% of California licensees have both. And this section is that reason that matters. Most buyers default to FHA because they think that it's the only way to get in with less than 20% down. And I want to challenge that. On a $780,000 purchase, here's what the comparison looks like. FHA loan minimum is 3.5% down with a 580 plus FICO score. That's $27,300 down. Sounds great, but here's what people miss. FHA charges an upfront mortgage insurance premium of 1.75% based on the loan amount. On a $752,700 base loan, that's approximately $13,172 financed into your loan. And then you're paying 0.5% annual mortgage insurance premium, approximately $313 per month, added to your payment for the life of the loan if your down payment is under 10%. Conventional loans with 10% down, you're at $78,000 down. You have PMI, private mortgage insurance. But unlike FHA MIP, conventional PMI cancels automatically when you hit the 20% equity. At current rates, PMI on a $702,000 loan at 10% down with good credit might run you $150 to $250 per month. And it goes away. FHA MIP on 3.5% down loan essentially never goes away unless you refinance. Over 5 years, the conventional route with 10% down will almost always win in a total cost, especially in an appreciation market like Rancho Cucamonga, where you're building equity. Now, there is absolutely a scenario where FHA wins. If you're at a 580 to 620 FICO score, if down payment is a current constraint, if you're buying a home that needs work and you want FHA 203K rehab financing, FHA is the right tool. There's no universal answer. This is exactly why you need someone who runs the math on your scenario, not just hands you a product. Here's the honest read on rates as of today. Rates are hovering in the 6.5% range based on Freddie Mac and bank rate data as of early June 2026. Fannie Mae's forecast has rates staying near 6.3% through the end of the year. The MBA expects them near 6.5%. The geopolitical environment is keeping rates elevated right now. When that pressure eases, rates move. Nobody can tell you exactly when, but pending home sales have increased 3 months in a row, which tells me there is a wave of pent-up buyer demand sitting on the sideline. The buyers who win in this environment are the ones who buy at the right price and refinance when rates fall, not the ones who wait for rates to fall before they buy. Because when rates fall 50 to 75 basis points, those pent-up buyers flood the market. Inventory gets absorbed and prices move up. Buy the house, refinance the rate. That's the play. 3 mistakes. I see them constantly. Don't be the buyer who learns these the hard way. Mistake number 1, getting pre-approved when you should be pre-underwritten. A pre-approval letter means that the lender pulled your credit, looked at your income, and said, looks good. It does not mean your loan is solid. I've watched buyers fall in love with a home in Rancho Cucamonga, write a strong offer, and then get into escrow, and then 3 weeks later, underwriting finds something the lender missed. A self-employment income calculation that doesn't work with the way they thought, a late payment from 2 years ago, a gift fund that isn't documented properly. The deal dies. The earnest money is at risk, and the buyer is devastated. The fix is totally simple. Before you write your first offer, ask your lender for a full credit, income, and asset review. Everything underwriting would look at, reviewed up front. It takes an extra 2 to 3 days. It saves you a potential $15,000 loss and a blown up deal. Ask for it by name. If your lender says they don't do that, find a lender who does. Mistake number 2, finding out about your insurance after you're in contract. If you're buying north of the 210 in Alta Loma or anywhere in the Rancho Cucamonga foothills, you are in a wildfire exposure zone. California's insurance market in 2026 is not what it was 5 years ago. I have watched buyers get 2 weeks from closing. They've removed contingencies. They're emotionally committed, and then the insurance quote comes in at $900, $1,100, $1,200 a month. That blows up the whole payment calculation. And at that point, walking away means losing your earnest money deposit. The rule: call an insurance agent before you write the offer, not before closing, before the offer. 30 minutes on the phone could save you a very expensive mistake. Mistake number 3, accepting your agent's lender without a second quote. I'll say this carefully because I know it's sensitive, but I'd be doing you a disservice if I didn't say it. When your agent refers you to their preferred lender, that agent may genuinely trust that lender, but their relationship with that lender is not your relationship with that lender. And on a $702,000 loan, a 0.25% difference on a rate is roughly $110 a month. That's $1,320 a year over 30 years, even accounting for refinancing. That is a significant number. Get at least 2 quotes. Ask each lender for a loan estimate, and that's a standardized federal document that shows you fees, rate, and APR side by side. It's your legal right. It takes 20 minutes. Use it. The best agent and the best loan are not automatically the same person's referral. I say this as someone who is licensed on both sides. I want you to know the difference because most agents can't even have this conversation with you. If this is the kind of hyper-local, honest market breakdown and you find it useful to you, then subscribe to my channel. I put this out every single week for buyers, sellers, and homeowners in the Inland Empire. No fluff, just the data and what it means for your move. So drop a comment below. Type RC buyer if you're actively looking in Rancho Cucamonga, or type just watching if you're still in the research mode. I read every comment and I want you to know who's in this community. You came to this video because you're trying to figure out if buying in Rancho Cucamonga makes sense for you, your income, and your down payment, as well as your timeline. And here's what I want you to do. There's a link in the description. It's a free 30-minute strategy call. No sales pitch, no pressure. You tell me your situation. I run the numbers, real estate and mortgage, one conversation, and you leave knowing exactly what you qualify for, what neighborhoods fit your budget, and whether right now is the right moment or whether waiting actually makes more sense for you specifically. Most people who book that call tell me it's the first time that they've had someone run both sides at the same time. That's the difference. The link is in the description. Book the call. Let's figure out your next move. Also, be sure to subscribe to the channel, like the video if you found it useful, and maybe share it with someone who is looking to buy in the area.